Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend of the channel, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
So at the end of episode 2, which was a lot of fun, thank you for doing that. We talked about the Fed and can they get to where they need to get to? So how do you want to kind of have this discussion? I think the Fed's painted themselves into a nasty corner where all the options are bad.
The Fed forever in doubt.
There you go. Yeah. Oh, that's funny.
Yeah. So the Fed, they've lost credibility. Nobody believes anything that they say because they haven't done anything. They've been talking a lot for the last year, haven't made a move. And, so this obviously they have to raise at least a half a point coming out of May. So the markets now did not believe the Fed were going to do anything. That's why you're seeing, the sell-offs that we've seen here lately, because the market's pricing in that half a point rate hike.
Yep.
And also the beginning of QT, because they have to do that now. They can't back off because Powell came out and said, and they have to make a move towards inflation, and, they have to keep moving till they break something.
I agree.
So they have to break the stock market or they have to break the bond market. They got to break something. And they're not going to reverse course until something does break. And, and that's what the market is still believing. A lot of investment managers out there, a lot of analysts still believe the Fed is going to immediately reverse course after this half a point hike. There's a lot of speculation they will not get to 2 or 3% by the end of the year. There won't be 6 or 8 rate hikes because they can't. That's what the thinking is that they can't without the markets breaking to a point where they have to reverse course. The problem is you have all this inflation, you have declining demand. There's a false narrative out there that the reason we're seeing inflation is because of demand. It's not because of demand, it's because there's no supply and prices are shooting up. And obviously there's demand, but not to the point of escalation in prices that we've seen. It's just because you can't get anything. And manufacturers and producers are cutting back because they're making more on less. And now with China, we got a huge blockade in the ports out there, one of the largest ports in the world in Shanghai. Just thousands of boats sitting there waiting. So we haven't seen that yet. That's coming.
Yeah. And again, this morning, China's talking about maybe having lockdowns in Beijing, right? I think Shanghai is the second largest city and Beijing's the first. I think, I could be wrong, but not good. Even if it's the other way around. Shutting down Beijing like they're shutting down Shanghai is not going to be good for the supply chain.
For everybody listening, start your Christmas shopping now. Remember last year that you had to get it done by October? I bet you're going to have to get it done before the end of the summer this year.
Oh yeah, that's a good point, right? Go shopping by July. Man, can you imagine? Oh,
you'll see. They'll start talking about it here soon about, the issues with supply chain and getting stuff here for the holidays. Yeah.
That's a great point.
First world problems, right?
Yeah. So let's talk about the Fed. I really do. So I listened to Powell's talk. So he was interviewed Thursday. That was the game-changing things in the market. Basically, the stock market, or what I call the dumb money, said, oh God, he's serious. He's going to raise 50 in May and probably 50 in June, which I called for months ago. Now they believe him. I think they believe him. But that's still just 1 1/4, right? Yeah. The scariest thing that Powell said, and I went back and found it a couple of different places, so it wasn't fake news. He basically quoted Paul Volcker. And he said the reason Paul Volcker broke inflation is he stuck to his guns, even when the market threw up. The fact that Jerome Powell is saying that now, I believe Powell is nothing but a guy who is telling the market what's coming. And he doesn't care if you don't listen. And I think he's going to do it. I think he's going to get raised to 3% by the end of the year, and then maybe 4% next year. What do you think?
Yeah, they have to make a huge dent in inflation. They have to destroy demand. They have to slow down the economy. They think they can do it without causing recession, but that's the same Fed that said inflation's transitory. The same mouth that said inflation's transitory until he had to capitulate. He was forced to capitulate from that statement is the same mouth that's saying we're going to land this soft and we're not going to cause a recession. So what the market is realizing is, wait a minute, there's absolutely no way to land this softly. There's absolutely no way to backtrack. You're in an election cycle. This year is going to be over before we know it. So, you're not going to get a hold of inflation this year. So they have to go into next year aggressively against inflation. So something's got to give somewhere. The political will, his boss is saying, you got to get a hold of inflation because people are starting to feel it. Rent, food, fuel, vehicles, everything, housing, and those numbers aren't even in inflation. The real rent escalations that have happened, the real housing inflation that's happened, those aren't in the inflation numbers. They're painting those numbers however they want.
Yeah, I
And
did
here's
them.
what you're going to hear from Wall Street and the analysts.
Mhm.
The ones that need inflows to make money to support their paycheck are going to tell you, oh, the Fed's going to back up. The Fed's going to back up.
Exactly.
The market in the bond market's telling you the Fed ain't backing up. They got an election coming. We got supply chain issues in China. This inflation ain't going anywhere, and they have to hold course and they have to break it.
Yeah, I couldn't agree more. I think the Fed's really got to get, again, I've done a lot of research on Paul Volcker, and the thing that he did to break inflation is he actually got the funds rate 200 basis points above inflation. He didn't have to have it there long, but you want to squash demand, you raise rates that much, people just put their money in the savings account. They don't buy anything.
Exactly. And, that's kind of what you got to do. And, I tell you, it's just fascinating time. There is no playbook. We've never been here. We've never seen anything like this ever in the history of the world. So, I mean, who knows where we could be, rate wise by the end of the year, where they have to go, they have to get control of inflation, because if they don't, I mean, then you're talking about, forget recession. I mean, you're talking about, who knows how bad it'll go, because people, so just understand what I just said. In a lot of areas, rent's doubling on people, and you have gas, and you have food, and you have everything else going up. So you've probably destroyed about 30% of discretionary income and spending from people. And where that came from over the last 2 years was a lot of the money that was put into people's pockets. Remember, you and I said, the reason we're seeing so much inflation in the asset level, a lot of people, during the bull market thought I was crazy. They were saying, a lot of the analysts, that need inflows to pad their pockets, like Kathy Wood, specifically, a fund like that is going to tell you, markets go up forever, price goes up forever, keep throwing money in. We got a 5-year vision. And the fundamentals are good because this is technology. This is innovation. It's got nothing to do with the Fed putting $1 trillion in the market, keeping interest rates low, and giving all of the people in the country money, through checks and this and that and the other. That's real money that went into the economy that people spent. So that narrative on Wall Street was, oh, it's fundamentals. These valuations make sense. And then they would put in the fine print, well, given the rate environment, and, with zero risk, basically effective rates of negative, that's free money. So now that's unwinding. So we had a deflation. Now we're getting a repricing. And again, the market still hasn't priced in the effects of everything. They're only now pricing in, wait a minute, the Fed's serious. We better trim a little bit. When the Fed moves, there's going to be another little pop. And, then when we start feeling the effects of everything that we're talking about, supply chain, this, that, and the other, you'll see even more. Now, again, this isn't bearish, negative, or whatever. It's just reality. It just is what it is. And, then you add the war on top of it. We have no idea where that's going to go, or, escalate, de-escalate, and who knows, what's going to happen there. It's interesting times.
Yeah, I think it's, in my opinion, and I think I think a lot of people would agree with this, but I'm curious if you agree. I think the Fed is a year late in raising rates. I think what they did at the onset was kind of like their only option, right? We just shut down the economy. What the hell are we going to do? But they were too low for too long. They bet on the word transitory. They again, I think they broke the housing market. I think they broke the stock market with some of the readings I did this weekend. There's still a lot of leverage. A lot of people got these stimmy checks that we've talked about. They put it into Robinhood or Webull, and then they started borrowing debt. The amount of leverage in retail accounts today is frightening. And if we do have a bear market, and then we have capitulation, and then we have liquidation, woo, be some pain.
Yeah. I mean, and arguably it's time for a reset. And I think that's what markets are doing. Markets are resetting just like the residential housing market had to do. And, what we're experiencing right now, just go back and look at 2018, when the Fed started raising rates, hiking rates in 2018. I would argue that when you say they're a year or two late, what they're doing now, they should have done in 08, 09 and then backed off. And, that's where they really missed the boat, because we've been in QE ever since 2009. It hasn't stopped.
Good point.
And we've been in a very, low rate environment pretty much since then. So they should have just stayed the course in 2018 because the markets were just throwing a fit. It wasn't a crash or collapse. I know that, growth was slowing a little bit, but it wasn't that bad.
Mm-hmm.
And then, with the pandemic, they should have pulled the foot off the gas as soon as markets rebounded.
Yeah.
As soon as the markets rebounded, and we realized, wait a minute, this pandemic isn't as bad as we thought. When I say bad, I know people died and it was real and serious. What I mean is, from an economic standpoint, it didn't shut the world down like they were anticipating, and it didn't wipe out the population like nobody knew what this thing was going to be. And it did some real damage. People died, but we didn't have to shut businesses down like we did and all those types of things. Could have avoided all that. Instead, they just kept doing that, kept throwing money out there, and just kept, going, probably 2 years longer than they should have.
Wow. Very cool.
I mean, look at China. Look what's going on there. I mean, there's no reason for them to be reacting like they're reacting.
Yeah, I don't get it. I just saw some pictures. So I have family over in that part of the world, right? Olivia's from Taiwan. So I've been there. I've been to China multiple times. I don't understand. I mean, there's some weird, they're like putting cages around apartment buildings. So they don't want people to go outside.
My thoughts are one of two things. Either they're just being super extra careful because they have such a huge, tight population, or they know something we don't, and there's something really bad going on, and they're just not telling us. Another strain, another whatever. And I'm not a conspiracy guy or whatever. I'm just saying, if they're doing all that, it's probably not because it's the COVID that we're experiencing that's just a mild cold. And if you're vaccinated, you probably don't even know you got it. Yeah. With this new variant that's going around.
Well, again, not to kind of pile on to conspiracy theory. I think one of the things that's become very obvious is their vaccine, whatever it was called, is not very, how should we say, not very good. And they refuse to take America's vaccines.
Yeah. So I think it may be, I'm not hearing any results of hospitalizations or stats on hospitalizations or deaths over there.
Yeah, you probably couldn't trust it even if we did.
Can't get that out. Yeah, because they didn't tell us the truth to begin with. But that's the only other thing, is that it could be something that's really bad that they're not telling us.
Maybe.
Or they're just overreacting, and they just think, for whatever reason, that they can somehow make it go away by locking people up. We already know that doesn't work.
Yeah, I have family over there. Again, they're nobodies in the hierarchy of anything, but their general feeling is their leader, Xi, very command and control, very much don't move, it'll kill itself out mentality. Now that, who knows what's really going on, but that's what they've told me over the weekend. So it's, what, again, I read this morning about Beijing kind of following Shanghai is very concerning, because at this point, if you're going to, what did you do? Shut down all of China right now? So obviously Tesla's factory was shut down for a long time. This morning, Foxconn, which is Apple's supplier, is going to shut down. At least that's the article I read. Lots of noise going on, and stagflation certainly this year.
Thank goodness all we're talking about now are masks.
Yeah, exactly.
Not shutdowns, not all of the, it's just like, do we wear masks or do we don't?
Yeah, exactly. Jeez, man, crazy. But the last thing, do you think we have an official recession this year, or do you think, like me, we have enough forward momentum that any real recession will be next year? What do you think?
Well, I think inflation's kind of taking care of recession, because recession's negative growth for, 2 consecutive quarters.
Yeah.
I don't even know that there's a definition of how negative. Generally, I thought, maybe I don't even know if there's a number, but it's just negative growth.
Negative growth.
Quarters. That's going to be hard to achieve with inflation, because inflation is just filling the gap, because growth is sales. It's not profits. It's sales.
Nope, you're right. It's not inflation adjusted. Yeah.
You're seeing earnings come out of a lot of these companies, especially this week, big earnings week.
Yeah.
That we've had.
Busiest of the week.
Go ahead.
I was saying it's the busiest week for earnings. Sorry, I interrupted. My bad.
Yeah. And, a lot of the earnings that are being reported are just because prices have gone up. So it's not like they're actually, making more money or doing better. They just have bigger sales because prices have gone up.
Yeah. Lots of great. So you agree that any recession is likely next year?
Yeah, unless something big happens, where are we at? April?
Yeah.
I just don't see any negative growth, because there's still just so much, demand out there for general things. Prices are so high right now. What I really don't think is we're going to get a grip on inflation by the end of the year. I don't think we're going to make a dent in inflation. So if you can't curb inflation, I don't think you're going to see recession.
Yeah.
I think once they get a hold of inflation, you might see some recession. So maybe 2023, but right now, I don't think they're going to be able to control inflation.
I think that's exactly right. I did a whole whiteboard discussion. I have a playlist now called Whiteboards where I basically articulated 2022 is exactly what you've highlighted. And then where I went in 2023 was the Fed is because now we're past November elections. We've got what we got. My guess is they get serious because they don't want to have inflation. Because once inflation becomes entrenched, it just eats at the bottom like termites in wood. So it's
2023. I mean, that's your election year, for the new
Yep.
2024 cycle. So I think that's the year that they get real serious about inflation because they're not going to get a hold of it this year.
Mhm.
And the reason I say that is the only way to curb inflation, the Fed has to come out and just boom, 100 basis points.
Hammer.
Just hit it. Eliminate the balance sheet right now, come out with 100 basis points minimum. Even that, you're still talking about, you're still under 2%.
Yeah, crazy.
I mean, that's what's so funny is that they haven't really done anything to really get after it and affect it. And the only way the Fed can curb inflation is to destroy demand. That's it. How do you destroy demand? You raise credit. You raise the cost of credit. People cut back. Producers cut back. We're already seeing inflation. Like I said, it's affecting people about 30% of the discretional income of the average person. So that's going to, have its impact in and of itself, but you still got to eat. You still got to get to work. You still got to put clothes on your back. So we're not going to spend that going out and doing other things, but we're going to spend more on what we're already doing. So it's kind of a wash.
Yeah. Yeah. Very exciting, very interesting times, never boring. Where can people find you, Greg?
Yeah. GregDickerson.com. That's where all my info is, social media links. Go check it out.
Very cool. Thank you.